Hi, and welcome to this bookkeeping basics video brought to you by Community Futures Parkland. My name is Verna O'Neill, the founder of VLO Business Solutions, and I'll be walking you through a number of important bookkeeping topics that you can integrate into your own small business bookkeeping process that will ensure that you're keeping your books and records up to date so you can make business decisions and strive to achieve your business goals. Before we get too far, I'd like to tell you more about Community Futures. Did you know that there's likely a Community Futures close to where you live and do business? There are 16 that cover rural Manitoba, so check into the nearest office to your location. The Community Futures, or CF, staff are in your corner with loans of up to $150,000 to help entrepreneurs to start or expand or purchase a business. They offer advisory services and business training, as well as other entrepreneurial supports. They're just amazing at what they do, and they're really passionate about your business success. Okay, let's jump into this video topic, bookkeeping basics. And here's what we'll cover in this video. All of these topics are important to setting up a bookkeeping or record-keeping system. We're going to start with some fundamentals and discuss a few tools that you may choose to use in your business. Then we'll move on to talking about our business performance, using those powerful bookkeeping numbers to make decisions and grow our business. We'll touch on a few things to consider at year end so that you're ready for tax remittances and starting your own books fresh for your new fiscal year. I'm really glad that you're here. It likely means that you agree with Angie Moore, who I have quoted on the bottom of the slide. You know that bookkeeping can add to your business success and you want to learn more. So here we go. Hello, and welcome to the first chapter of the Bookkeeping Basics video series. First off, let's address the elephant in the room. Bookkeeping isn't a favorite task for many business owners. You've likely started your business because you're really interested in your field or industry, or you love the doing part of the equation, not the administrative tasks of running a tight ship. I was talking to an entrepreneur about this very topic, and she said she never knew there was so much tracking and paperwork involved. She just wanted to connect with her clients and help them by providing great services. But since you're here, you may feel the same way as this very insightful business owner. Or you may already have your system set up and you just want to make sure you aren't missing any important topics. Whatever your motivation, I hope you walk away knowing that bookkeeping provides the starting point to your financial power in your business. Summarizing your bookkeeping information into reports we're going to look at in this video series is crucial to helping you make well-informed, quick, but strategic decisions in your business. Whether you do your own bookkeeping or hire someone to do the bookkeeping for you, it's important to know what your bookkeeping function involves. Bookkeepers won't take away all of your responsibility as the owner. You're still in charge of guiding your bookkeeper, providing all of the timely source documents so that they can enter the data into your system. You need to check in and make sure that you ask questions about the financial transactions entered, ensuring that these entries and tasks are done. Things like paying bills, issuing invoices, following up on customers that owe you money, that's called accounts receivable, reconciling your business bank accounts and credit card accounts every month. I'd love for you to take a few moments and write down the tasks from this screen that you want to check in on. If you had a light bulb moment while you were looking at this screen and check on other tasks that you're not sure are getting done, write those down too. My background in business development has given me a really great front row seat to talking with entrepreneurs about bookkeeping. Those that thought that their bookkeeping was well in hand, only to find out that they were behind on tax remittances or their business wasn't collecting on the accounts receivable. Again, some customers can be late with their payments. What was the problem? The bookkeeper wasn't told it was their job to do these tasks, and the business owner didn't check in. They assumed that the bookkeeper was taking care of these activities. If you're a passionate doer in your business and you aren't a big fan of administration, you may have skipped over a few of the bookkeeping basics or fundamentals, which I thought we could cover really quickly right now. Number one, there's a difference between what your bookkeeper does for your business and what your accountant does. Typically, bookkeeping focuses on record keeping and organization, data entry into your bookkeeping system. Often, bookkeepers are whizzes at bookkeeping programs and systems, but they may not be as aware of tax write-offs, the latest rulings by CRA, and they can't provide auditing services to larger organizations. That's an accountant or tax professional's job. Number two, bookkeeping is built on a system of matching and organization, making sure that debits equals credits for every transaction. But you may not realize that debit just means left-hand side and credit means right-hand side. Look at that T on the slide. Keeping numbers in balance is the key. And for every account in your bookkeeping system, debits and credits means recording a number either on the left-hand side or the right-hand side, not necessarily good or bad. If you have an automated system like QuickBooks or Sage software, you don't really see this background information. You may never need to know it. But if you use a double entry paper-based manual system, learning about the rules of debits and credits is crucial. Number three, fundamental to record keeping is your list or your chart of accounts, assets, liabilities, equity, revenue, and expense. And again, an automated system may provide you with a general list that you can customize to suit your own business. But knowing the terms and understanding where each of these account categories fall on your reports and in your financial statements is critical to understanding your business health. Okay, join me for the next chapter in this video series where we're going to discuss bookkeeping tools that you can use in your business. Hello, and welcome to the next chapter of the Bookkeeping Basics video series. Off the start of this video, I'd like to take a little bit of time to reflect on these questions. The first is, what do you use in your business right now? There's a variety of different bookkeeping methods that are available to you. Do you put your receipts in a shoebox, wait for the end of the year, bring it to your bookkeeper or accountant once a year? Do you use a paper-based manual system with a pencil and an eraser and a combined journal? Do you use an electronic spreadsheet? Do you have a software package? All of these are great strategies if they fit with your business. Do you need to make a change? And is that why you're watching this video series? Another question to ask yourself is, are you keeping the personal expenses that you have separate from your business expenses? And if so, how do you do this? If you don't separate your business and personal receipts, that's step one of your to-do list. Do it immediately when you've incurred the expense. Make light work of this organizational task. When you're ready to record the receipts in your bookkeeping system, you're going to be so thankful that you've organized your documents this way. Jumping back to that question of your bookkeeping system and what you use right now to record your financial transactions in your business, if you're at a crossroads deciding to make a change or want to evaluate where to begin with your bookkeeping journey, here are a few simple pros and cons of three system types. Automated systems like QuickBooks or FreshBooks or Sage, or the many others that are out there. Simple spreadsheets that typically track your revenues and expenses and maybe a few larger assets in your business. And then thirdly, the paper-based systems where you use journals and ledgers to track your accounts and use a pencil and an eraser and paper. As you can see, the case is often made to transition into some sort of an automated system. In business, our most precious resource is time, and the paper-based system takes the most time, and there is the greatest chance of human error with that system, although it is the least expensive money-wise. So some things to take into consideration as you explore this topic. Here are just a few ideas for you if you're thinking about switching into an automated bookkeeping system. This list is from Shopify, but there are many other recommends out there to investigate into. A couple of the options I already mentioned made these lists, so definitely some different options for you to investigate. If an online app or a computerized bookkeeping program just seem a little over the top for your business, a little too large, a little bit too daunting, but you also don't want to use a paper-based bookkeeping system, check out the bookkeeping tracker that accompanies this video series. It's a simple spreadsheet that can track transactions in your most used business accounts. Here's a sneak peek of the spreadsheet and its features. It has a how-to section at the top of the first page, encouraging you to follow along with the step-by-step instructions. You can customize your accounts to suit your own company's sales, expenses, and main assets and debt areas. As well, along the bottom, you'll notice that there are tabs that contain more areas of the bookkeeping tracker where you can log vehicle use and your month-by-month transactions for the complete year. Take the time at the end of this video to watch the instructional video and download the bookkeeping tracker tool itself and see if it's right for you. Hello and welcome to the next chapter of the Bookkeeping Basics video series. Regardless of the system you choose, if you spend time each week and each month to input your bookkeeping transactions into your chosen system, you're going to be arming yourself with power to make incredibly strategic business decisions. Things like which of your products or service lines are the standouts? What expense areas need attention to tighten up? When can you time that important purchase of new equipment? Who owes you money that you need to follow up and collect on? And how much should you be setting aside in a separate tax bank account for those remittances to government, GST, PST, payroll, income tax, and CPP on self-employed earnings? All of these questions are on the minds of business owners, and with a click of a mouse or questions to your bookkeeper, wouldn't you love to know the answers to these inquiries? So my question to you is, which reports do you find crucial to look at when you make your business decisions? Spend some time in your bookkeeping system to access those reports and peruse the numbers. The first report that we'll look at today in this video is the income statement. It gives you an evaluation of your revenues or the sales of the business and your expenses or the cost of doing business for a period of time that you'd like to analyze. Usually a business owner looks at this report once per month, but I've known owners who actually track this information on a weekly basis. The income statement or the profit and loss report provide a deep dive into the profit of a business, and that is something every business owner needs to know. Now, a couple of tips. If you have the opportunity to separate your sales line items, you're going to be able to track them individually, and you can find out much more information about the performance of your products and service sales that way. Also, this example doesn't quite do it, but there are reports within the automated systems of QuickBooks and Sage or FreshBooks that you can access that express each of the expense line items as a percentage of sales. And I think that's a great idea. You can then see the portion of your sales that must be devoted to each expense. Watch for the variations in these percentages every month or every week as you pull that report. Now, join me for the next chapter of this video series where we discuss key performance numbers and ratios from this profit and loss report that you can monitor in your business. Hello, and welcome to the next chapter of the Bookkeeping Basics video series. This video will look at a few key performance ratios that you should keep an eye on as a business owner. The gross profit margin, the first one listed on your screen, which is revenue minus the cost of any goods sold, all divided by the revenue, and it's expressed as a percentage. The net profit margin, which is revenue minus all expenses, then divided by revenue, also a percentage. Profit margin benchmarks or targets that you have will vary by industry or the field that your business operates in. We're going to take a look at some handy benchmarks in just a few moments. The last percentage I'd like to draw your attention to, it's on your screen, will monitor the line items and express them as a percentage of sales. The individual expense line items divided by revenue. That was a big recommendation from a previous chapter in this video series. Monitoring each individual line item or account can reap big rewards for your business. It can catch expense overruns really quickly. Again, you're looking at percentage of sales month over month or year over year. You'll see where there's a variance to those figures. And secondly, you can immediately identify if bookkeeping missed a major transaction, something was not entered into your bookkeeping system, a sale was not entered, or an expense item. And a great question for you to reflect on: do you have profit goals? Using your profit and loss report and these key ratios will help you monitor your progress on achieving any profit goals that you've set for your business. So here's the website I had mentioned before, where we can assess financial performance of companies within our own industry. This business benchmarking tool aggregates all of the companies that report to government and publishes it anonymously to this website. So let's go ahead and you could explore this website further, but let's go ahead and create a report. And you can see that to create a report on the financial performance in my industry, I have a few decisions I can make and customizations I can make. I can determine which of the revenue ranges might more closely fit my business. Let's leave it at $30,000 in sales to $5 million in sales. We could, if we wanted to, customize it for the province that we are in. Let's just leave it as Canada so that we know that it will populate this example report. You can also customize based on if you're incorporated or unincorporated. In this example, let's leave it as is, just so that we can be sure we have a report that's generated in our example. You can distribute by the revenue, the total revenue that is being earned, and you can do it in thousands of dollars or percentages, the line items of each. And we can search for a industry. So I'm going to search for the restaurant industry. If you knew your NAICS code, you could enter it there, and then you click on search. In this case, restaurant was a little too general. This report tool is asking me to further identify, if I can, what kind of restaurant. So I'm going to say I'm a full service restaurant. We'll see if that will create a report for us. And it does. Again, this is something that you can go back and regenerate as many times as you wish. But you can see that in the whole industry in Canada, over 35,000 businesses reported, and they will separate this report into the top quartile, the upper middle, or the lower middle quartile, or the bottom quartile of companies that are reporting. And that is based on the profitability of the business. So you can see, if we knew your percentage of sales figures, you can compare them to this benchmarking tool and really find out some important information about how your performance is against all of the 35,000 businesses in this case that reported to government and have their information aggregated on this website. Hello, and welcome to the next chapter of the Bookkeeping Basics video series, where we'll explore a report called the balance sheet and how it can be used to assess your business performance. The balance sheet provides a snapshot, a picture of your assets, the things that your business owns, liabilities, the debts owing to vendors, and the owner's equity in the business at a certain point in time. Again, this report is usually created each month after all of the data for the month is input. And you know that you've done those great bank reconciliations and credit card reconciliations as well. So 2 things to keep in mind. I would recommend that you know the who, the what, and the when of money owed to your business from customers. That's called accounts receivable. And money that your business owes to vendors, and that's called the accounts payable. I would suggest to make a list of aged accounts receivable and payable so that you can either put efforts into collecting that money or making payments, or maybe you'll just know that your receivables and debts are well cared for and in hand. You'll know what's overdue and needs attention. Number 2, compare this balance sheet statement month to month and year to year. Identify if there are trends that you can foresee. For instance, are you low on cash in certain seasons? Is your inventory needing to be replenished in busy times? Is your company's net worth increasing from year to year over time? If you have a business that has operated for a number of months or years, and especially if you'll be seeking financing or investment, these key ratios that come from your balance sheet are very important. The current ratio. If you have to pay for your short-term debts, can you liquidate your cash and other short-term assets to cover them? This is the current ratio. Usually a 1-to-1 ratio or better is the target. The total debt to equity ratio. Just like it says, this ratio takes a look at all of the debt that the business owes, the liability, relative to the amount invested into the business by the owner, the equity. It provides information about who paid for the assets and the expenses of the business at a certain date. Is that your debt holders that have paid for your business, or have you reinvested your company earnings and your own investment into the business? Usually, if you're looking for new business loans or financing, your lender would consider a 2 or 2.5 as a good ratio for this. But again, it will vary by industry. And next on the list, the inventory turnover. For those businesses that want to make sure that the inventory has been sold and replaced or turned over in a period of time, perhaps a year, calculate this ratio. If the inventory that you sold in your business was worth $50,000 last year, and on average you had $10,000 of inventory on hand at any time, you can see that you've rotated your inventory 5 times throughout the year. Benchmark targets will vary for this industry, so you may need to do a little bit of research to get a goal in mind for this target. Explore these ratios each time you generate the business reports for your company. Again, the more often you reflect on your balance sheet and your profit, loss, or income statement, the more powerful your decisions can be in your business. Hello, and welcome to the final chapter of the Bookkeeping Basics video series. Year-end bookkeeping requires that you adjust your account balances to accurately reflect the business operations of your current year. That's called adjusting entries. and that you get your bookkeeping system ready for the new fiscal year. Those are called closing entries. You can see by the list of adjustments that year-end can get pretty involved. So that's why getting a tax professional or an accountant might be a really strategic move for you and your business. Business use of home or adjustments to your inventory account, or even writing off customer accounts that you just can't collect on, maybe even expensing your personal vehicle costs due to business travel. All of those different costs can get pretty complicated, but need to be considered. There are some excellent resources to help you understand these year-end considerations, and I have some on the screen, the CRA website, and also they can be found on the accompanying resource list for this Bookkeeping Basics video series. So make sure that you download that PDF, click on the CRA link, and explore that area of the website. But even more than this, your year end should be a time that you have some reflection, thinking about the year that was, mapping out your goals, your profit goals perhaps for the upcoming year, and drafting changes that you'd like to implement, that you'd like to make in your business. Definitely, a business owner should be assessing their pricing strategies, thinking about their profit goals, and any changes that could or should be made to their inventory management systems. Inventory management is a big topic, an important topic for business success. There's a role for bookkeeping in the whole process, so let's take a quick look at a couple of topics related to inventory management, or the tasks that are involved with ordering, receiving, storing, tracking, and bookkeeping for your inventory. You'll see a few common digital point of sale or POS systems listed under the title on your screen right now, but you may have already developed your own system. You might use a paper list or a spreadsheet, or have another automated system already integrated into your business. For instance, restaurants, you have a very specific inventory tracking system that is specific to your own industry, and other businesses may have the same. It's easy for startups and small business owners to jump into just sourcing their products and selling them without an inventory management plan. But without tracking all of the details about your inventory, you might end up with headaches in the longer run. So let's take a look at this list of 7 items, and then you can jot down any steps that you want to add into your system in the future. By answering these questions, you'll get a better idea of the inventory management tool that could be right for your business. So first on the list, will you stock your products on site at your own store, or will you outsource this task? How will you track inventory? Are you going to use that paper-based manual system? Are you going to use a spreadsheet? Do you feel comfortable with something along the lines of Excel spreadsheet or a Google sheet? Or are you more comfortable with an inventory management system that's an online system or an app? What's important in your business to track? Should you track supplier product numbers and quantities on hand, where your inventory is stored? Would you want to track other information like the product price per unit? Should you customize your inventory management process, the actual process of managing your inventory? Do you need to develop your own SKU system or stock keeping unit, SKU, to identify your products? What factors will help predict your future inventory needs? Really thinking through your sales demand and your promotions of the marketing campaigns you've implemented into your business, the seasonality of your inventory, what kind of lead time from your suppliers you need to provide them. Do you need to set up an inventory receiving process? Do you have enough inventory that unboxing and check-ins and stocking or shelving is a process for you and your staff? And lastly, remember to schedule inventory monitoring activities. That will help you spot any kind of slippage or theft or other losses that can occur. Now, I know we went through this list rather quickly, but if you take your time considering the right inventory tool for your business, it really can save you time, effort, and money in the long run. Thank you for viewing the Bookkeeping Basics video series. We accomplished a lot. We looked at bookkeeping fundamentals, examined the differences between common bookkeeping tools, found some key ways to analyze our company's performance, and organize our bookkeeping records for year-end. A big thank you to Community Futures. Again, reach out to Community Futures with your questions about your business startup, opportunities, or challenges in your business. They want to help you reach those business goals. I invite you to keep in contact with Community Futures, continue learning, making positive changes in your business. My name is Verna O'Neill, signing off and thanking you once again for watching the Bookkeeping Basics video series. Welcome to the bonus video of the Basics of Bookkeeping video series. We're going to take a look at the bookkeeping tracker in this video, the step-by-step guide of how to use it. Check out if it's right for your business, if it can be used in your business. So step one, up in the top left-hand corner of this spreadsheet, you're going to notice that there is an opportunity for you to customize the accounts on this first page of your bookkeeping tracker tool. So below the green box, you'll notice that there's a place that you can type in your company name. And then below that, your chart of accounts that you can customize to really specifically describe the revenues and the expenses of your business. In this bookkeeping tracker example, I've already customized the sales or the revenue items into workshops, consulting, different types of products I might sell. As well, there's the opportunity to have returns made or allowances plus coupons or discounts. Underneath that sales area, you can see listed typical types of expenses in a business. So these are all just, again, the ones that are suggested you can customize to suit your own business needs. You'll notice at the bottom of the expense list, I have customized one under line 49 there, the reproduction of products for resale. So any of my expenses related to that for this ABC company, this company I'm setting up, I would put my expenses under that particular account. And there's some other ones that you can customize as well for your own purposes. Moving to the top of our chart of accounts again, but a little further to the right, we see assets, so the things that the business owns, computers or furniture, and then liabilities or debt, the things that are owed to other entities by our business, the GST and the PST. And then lastly, within this particular tracker, this business that I'm actually using as my example is not incorporated. So I don't have wage expense for my business owner, but I do want to track the withdrawals from the business that this owner makes, that I make. So I have an account called owner withdrawals. And again, you can see that you can type where the company name is to further customize this particular chart of accounts. So just so that you note as well, up in the top green box where it has the step-by-step instructions, there's a little note that the accounts have to be customized on this page if you want them to roll through to the other tabs of this bookkeeping tracker. The account titles on the other sheets are locked just so that you don't type over top inadvertently. If you want to unlock and modify, you can use the review tab at the top of the screen and click on protect or unprotect the sheet and use the password books with a capital B to either protect or unprotect, to lock or unlock the locked cells. So that's just a nice little note I wanted to mention to you. Really use the step one, this first sheet, to customize your chart of accounts. Step two talks about your personal vehicle. And if you use your personal vehicle for business travel, you can use this tab or another method, of course, to track your vehicle log and really record your business trips. So there's a couple of different vehicles that are listed here. Again, if you have one vehicle, just log all of your trips under the vehicle one area. If you use more than one vehicle, um, use both or more. You can, again, replicate this sheet as many times as you need if you have a lot of different vehicles that you're using. I would highly suggest that you take a look at the CRA website about business use of personal vehicle. There's some rules and some tips that you want to adhere to, and really great reading material. So that is the vehicle log area. If you have a home office, if you're home based, there are some expenses that you can apportion to your business from your home office. So again, tab number 2, which is step 3, you can calculate your home office use, and it's basically prorated a lot of the yearly costs of your home that you can prorate based on square footage to your business home office. So again, there's a really great example on the CRA website of how to do this. There's a clickable link, take me there to help you understand business use of home costs. Even if you don't do this month by month, definitely take a look at doing this at the end of the year-end home office calculator. Step number 4 is all about statements. And there's a year-to-date summary statement that runs along the bottom of your screen. You'll notice I'm hovering over it with my mouse. It's a handy snapshot of the company's progress year to date. And again, there's some automatic calculations in it. It uses the chart of accounts that you've customized, and it shows for the year. You enter the year in here. I have 2023, but it could be 2024, 2025. And it shows at this moment in time, year to date, how are all of your revenues, your sales doing? Where are you at with your expenses? It automatically calculates your net income. And then up at the top again, a little farther to the right, it will track the major assets and show you where you're at with your owner withdrawals as well. So that's a really great piece of the pie as well. Just to let you know, there are some year-end adjustments that are made at tax time, often by your tax preparation company or your accountant. Things like business use of home, inventory to adjust your cost of goods sold, things like expenses that you've prepaid for, but maybe they roll into the future years. Things like insurance, especially, that happens with. You pay for an insurance premium in the middle of the summer and it spans 2 fiscal years, those types of things. So just be aware that there are some year-end adjustments that need to be made to your records. And that's an important thing to talk with your bookkeeping, tax preparation consultant, or your accountant about. Step 5, the next sheets in the tracker tool are the month-by-month transactions where you can input your sales, your receipts for the expenses that you have within the business. And you're going to see that I've done a couple of real quick and easy sales transactions entered under different line items on the top in the green. And then under the expenses, I've done the same for the expenses. And you can see the expenses actually correspond to all of those chart of accounts that we had worked on to customize in the first sheet. And they run actually quite far over to the right. So you're going to see that the columns are headed up by the account names, one column per account name, and customized to suit the account names that you had indicated on the first step. Okay, column totals as well. Moving over just a little farther to the right on the bottom tabs, January transactions, January statements. So this is where you can see in a snapshot, how did I do with my sales and my expenses for the month of January? Arrives at a profit or a loss for the month. Then as well, at the top of each of the monthly pages under statements, it keeps track of your PST, your GST remittances, more information about GST, more information about PST on those tax websites. And I highly recommend that you read more about your obligations. One little caveat that I wanted to make you aware of, that this bookkeeping tool really is just a single entry system, and it doesn't look to balance like where did the money come from, where did it go to. It just is interested in tracking expenses, tracking sales, tracking assets, GST, PST. So if your business is more complex, again, my high recommend to consider using a bookkeeping software to track your financial transactions in your business and get those really important reports handy for decision making. So this is the bookkeeping tracker, how to use the bookkeeping tool. I hope that this has been helpful to you. You can consider using this for your simple bookkeeping tracking in your business. And as you progress, then move on to something more complex as your business becomes more complex in its record keeping as well. Thanks for watching, and make sure you download the accompanying spreadsheet.